So again, when you're trading, don't just anticipate breaks of structure. Like you're getting this counter trend movement down. Don't think it's just going to push you below this low because this isn't a little downtrend. What typically happens is within this, you have an area of demand. Like I said, there was demand down here that pushed price up to create this high. And that demand, right, we were trading into it. Now, usually, most of the time, doesn't have to be all the time, obviously. What you'll get is a BOS and then a continuation, because continuations are more likely to happen than reversals. But that's not what we got here. And you guys can see that. You guys can see that. No BOS. So to me, we traded below this low. First of all, we traded below it here. So it was invalidated with this leg to the downside. And then we pulled back and made another leg. And then we had supply. So I tried to sell it here. Again, it chopped around for like 9 or 10 minutes. And I was just like, I'm not going to sit here and stare at this thing. I'm going to close it with pretty much break even, maybe like a couple dollars of profit. So now what happened after that? So we run the low, breaking structure down to here, fill a lot of imbalance, right? Push above this. We push above this. And what happens? This supply failed. What caused this supply to fail? This supply turned to demand, made this fail. And what I mean is this was supply. This was potential supply if we were to create a new low. We don't create a new low, right? We fail. This fails to hold. And what caused this to fail? This is demand, right? Because it pushed price up. So I tried to play off this, and it did work out momentarily. Got up well over a 1-to-1, and then came back down. Now this is break even. Why is this break even? Because we broke structure, right? So we create equal highs here with this demand. That's enough conviction for me to enter the market long. Now we push up, push up, push up. This is a break of structure. It's a new high. So secure partials at a 1-to-1. And then move your stop because a new high has been made. And it ended up coming back down, which is cool. That doesn't matter, right? It's just part of the game. So, oops. So this one was break even, which was annoying, but it is what it is. So I was sitting at like a 0.33% loss, because this was break even, this was break even. And I'm like, man, there's nothing, really happening. In hindsight, this one was probably break even because we didn't trade until higher time frame point of interest. And that's one of the things I look for. So this was kind of bad on my end. I should have been only trading within a higher time frame POI, or should have been trading within the trend coming to a higher time frame POI. There's nothing else really down here that I was eyeing. Like I wasn't eyeing any of this. So it was just kind of, this trade was like an intuition based trade where I realized, or I had seen that we had taken a low and that we broke structure and that we had a lot of imbalance above to mitigate. I take off 0.33% after I hit 1-to-1. The fib starting at the black candle imbalance. So I'm going to keep going, but can you elaborate on that, please? I want to know what your answer is.
Oh yeah, no, I can literally actually circle it on the screen. Sorry, I figured you might. I was trying to figure out how to like, yeah, in that area because I saw that where can we make it like a little bigger so we can see
Yeah.
the yeah.
And
Okay.
yeah, I was gonna say, everybody else, if you want to unmute and ask questions, you can.
So what I saw here is I saw that we had this imbalance here. Technically we have two, but I mean, if you were just push them all, bring them all together, that would be the range like of it.
Mm-hmm.
And so price came and hit this to fill that imbalance, and then it continued lower. So my
Right.
question was, and like we're seeing this now in hindsight, like, okay, bet, like, we understand like how this imbalance helped us with getting in for continuation of the bearish trend. But my
Yeah.
question was, outside of like now that we understand like the imbalance, would you draw like your fib like from here to here? Like down
Mm-hmm.
there? Like would you oh shit, hold on. Let me zoom out because it kind of so would you draw your imbalance from like starting here and ending here? I mean sorry, not imbalance, your fib.
Mm-hmm.
Would you start your fib at option A or option number one, or would you start your fib at option number two? Because I feel like I know we use fibs, but I'm like seeing myself like I don't know if because like yesterday we talked about how to think quick on your feet and like if structure starts to shift on you, like you being able to catch on to that quickly. But I feel like me working on strengthening that is being reflected in like kind of the confusion that I've been having with fibs and how we draw them, because I feel like there's some price action that might not really be clear that maybe I'm not seeing, or like training my eyes to whatever.
Yeah. I mean, personally, I would do it from here because this is a pullback in my opinion, and a little trick to like validate if something is a completed move is if you do this and price reverses near the negative 27, that validates that this was a leg, like a legitimate leg, and you can see that, right? Negative 27 is really good for profit taking. And a lot of, I mean, there are so many like retail people who use it and even institutions that use it, that it is like a huge magnet for price. And if you pull a fib on a move and you see that you get a rejection like right at the negative 27, which is pretty much what we had here, that validates for me that this was a complete leg to the downside. So this move already happened, and now the next move should start from here down. Does that make sense?
Yeah, okay, like stairs, like a stair step. Okay.
Yeah, like that's kind of how I think of it. But because when a leg is completed, you don't want to look from the top of that leg to a lower part. Like this is the leg here, and it's already been completed because we've come into the negative 27 right here. And that's the completed movement that we get. So this leg is done. Don't worry about what's up here. Focus on the new structure that formed. So here to here.
Okay, thank you so much.
You're welcome. So yeah, that was a good question. And like just looking at this, it is a little hard and it was really annoying this morning. I don't know if you guys have kind of thought the same, but lately the markets have been really tricky and difficult to trade. That's not just me saying it. There's a really popular trader named MyFX Journey or something, and she did like horrible this week and told all of her students that she was pausing trading. So yeah, it's been really rough, and it's erratic right now. It's either erratic or there's no volume. So it's literally the worst case scenario in either direction. And it's just stupid, but you manage it, then you control your risk, and you can still come out on top. Like I'm down today, I was down 0.33%, and I took these two and broke even on them. I made a little bit here, but it's pretty marginal. But now this was the one actual like good trade that happened today. I was actually on a call on a one-on-one that comes with our VIP mentorship. So I was on a call with a student, and he and I were talking about what was happening here. So I was like, okay, this trade, this is legit. The sell here is good. That's a completely reasonable trade. The buy was a little bit of a stretch just because we didn't actually trade into anything. We just took a singular wick low over here. So that one was on me. I honestly shouldn't have placed that trade. It was okay because it broke even, and it is what it is. But this was valid. This was not valid. The trade on EU was valid. That made sense, and it was logical to take. And I'll go back over that since I wasn't recording at the time. But this was a really solid trade that just made a lot of sense. So we'll go over it now.
Sorry, I got a question quick. Do you think
Yeah.
the market's been quite dead because of the month or like the time of year that we're in?
Yeah, that's part of it. August is notorious for having like no volume.
Why is that?
Just because it's the summer and the
Okay.
algorithms, like the markets move based off algorithms mostly, and the volume just decreases at this time of year. It's really active in the beginning of the year. Like, I'm not even lying. And some of the people who are in VIP on this call, in like January and February, it felt like I could close my eyes and place buy or sell, and I would hit TP1 just because the markets had enough volume to where they were respecting the institutional order flow. But yeah, during summer is notorious for having very low volume, just like the end of December and into January, it's really low. So yeah, it is partly the time of the year.
Yeah, bro. Thank you.
You're welcome. So anyway,
well, I didn't
Yeah.
hear you when you said what percentage you close after you hit 1 RR.
so up a 1-to-1, I do 0.33%.
Or
And that, like, it's really big if you think about it, because if you close out 0.33%, you're gaining 0.33% of your account, right? And it's not literally 0.33%, it's 33% of your original position. So like if you're risking 2%, you're up a 1-to-1, you're up 2%, you close out 33% of 2%, you're going to be up 0.66%. So, but the math stays the same. It's like if you're with 1% risk, you're up a 1-to-1, you're up 1%. You close out 33% of 1%, that's 0.33%. So now if it goes back to stop, you only have 66% of your original position writing, which inherently means that you have 66% of 1% risk. So if you do the difference, it's a 0.33% gain minus a 0.66% deficit or loss. So then you only lose a third of 1% instead of 1% if you didn't do all that. So that's why it's really important. Anyway, with these trades, break even. Now we were just continuing with the trend. So after this false break of structure, and I say this is a false break of structure because you have this high right here, and we sweep it and make a new low relative to this one. So now we would have been confirmed bullish if we went like this, made a higher low and then a higher high, but that's not what happened. This was just a run on the high here and the high here. So now this is our leg to the downside, and I was pissed off because I missed like 2 entries on this, and it would have just been layups, to be honest. So we had this imbalance right here that I was looking at. What you guys will see is I don't even play the full fill of imbalances anymore, because what ends up happening is they just get filled by a little bit and then go. So like this imbalance here, what you'll see often is you'll see price trading up into a little part of it and then going down, missing the complete fill that's up here. So I don't do full imbalance fills, to be honest, unless it's just way too obvious and clean. With imbalances like this, I would just place it where the imbalance starts, and then that would be where I open my position. So here we had this push down. I was going to enter right here, put my stop above the high. So entry right in here. I also discussed this when I was on my one-on-one. So you could have done it here, or you could have done it above this. It really doesn't matter, but I wanted to place it right here. And then I was going to target this low, because this is now external liquidity. So we get our pullback, right? This high made this low, and we're in a downtrend. So we expect price to make a lower low, right, relative to this one. And this is your target. This was a 1 to 4.81. That one ended up missing. So then I wanted to play it again. And of course, I wanted to take it not from this supply, but from this supply, because this was left untested. This was unlimited. We never got a pullback to it, right? So that's where I wanted price to go up here. And the target would have been, you could have done it down at this low, or my higher time frame target was all the way down here. So like the closer we start getting to it, the more I become convinced that we're actually going to meet it. And that's what could have happened with this. So now this trade is hindsight, but not hindsight, because I did do this real time. I discussed it when I was on my session, and I was looking for this. You could have targeted this, which is a 1 to 3.3, or you could have targeted this, which was a 1 to 7. Barely missed. And what did it end up respecting? It respected this supply level here. And the reason it likely did is because this is what actually caused this new low. This movement in here is what caused this low, not this up here. So that's why sometimes you don't get pullbacks to the origins of breaks of structure. Like this is the origin of this BOS all the way up here, but you didn't get a pullback to it, likely because, again, likely because this is the move, or this is the supply that actually caused this new low to be formed. And if you wanted to take an absurd trade off of this, you could have put your stop right here, entry here, stop above this wick, and you could have taken it to this low, or you could have taken it all the way down to the higher time frame POI, which would have been a really good RR, a 1 to 12, almost 1 to 13. And the reason that I really like this supply, or that I like supply regions like this, is one, they work. Two, you can clearly see consolidation, manipulate, BOS here, BOS here, and then we get a retracement up into this to push us lower, right? So the best supply and demand regions are the ones that have that run on liquidity like this. You can clearly see that these were highs and this ran it out, and then we ended up going down. This is fractal, but you can see, like, if you go to the daily time frame, this stuff happens all the time where you have lows that get run out by a single, like just a single wick, and then you get the price action that you actually want to see. It just happens more frequently on the 1 minute because it's a 1 minute. So again, you could have taken this trade. Now this is a trade I actually ended up taking, and the stop was a bit aggressive, but it was for a good reason and it was logical. So what we ended up doing here, right, is we had this leg down, a retracement into this supply, which I saw it was like, damn, it did just test it and it is going to head down. So we made a new low, right? This is a single leg here, right? So one big leg to the downside. And then what did we have? So within this leg, here's the origin of the entire push, right? The origin is usually just the last like buy to sell, or sell to buy in the opposite case, before our actual move. Now, why did I take it all the way down here? Well, if you look, this was tested here. This was tested here. So now the only place that's untested, when I mean tested, is we have this and then we spike into it, right? And then head down. The only region that was untested was this. This had not been tested after we made this low. So I put my entry here, right at this imbalance fill and kind of the last up close before the down move. And then I targeted my higher time frame POI right here. And on the way down, it's a bit tricky, but watching it play out, you could see this mitigated this. This is supply. This is a new low, which again is discretionary, but from my perspective, this low pushed up, we made this high that made this low. So I'm treating this as a leg, pullback leg. And I know it looks a little compact, meaning like this isn't a drawn out push up, but for me, it was still the high that made this low. So you could have, if you wanted to, entered again. Could have entered again right here. Stops above this, taking it down. And then it never quite tested this candle, but it got close. So yeah, that trade that I just drew on there was hindsight, but I actually did end up taking this trade. And surprisingly, this did not hold. This demand all the way down here happened yesterday. Yeah, it happened yesterday. Didn't end up holding and we traded below it. So now I'm bearish on GBP USD again. So I'm going to be looking to sell it. And that's not just on like the minute time frame, that's on the higher time frames and stuff. So GU is now bearish again, at least until we get way down into discount prices, like all the way down here. That's what I'm referring to when I say discount, because this is the origin of this move that broke the structure here. So this is the last like sell the buy that really gave us that fuel to go up. And now, you know, we broke back down. This was just a run on this high and we broke back below this. So now I think we're just going to short off even more. So I'm going to be looking for sells on that. But yeah, those are the few trades I took. Again,
Can we look at that imbalance in that last sell position that you had? I think it was a little bit lower.
Yeah.
On the 1 minute. Yeah, down there. Okay. And then if you can make like the candles just like fatter, yeah. Okay. So I saw that you said that we could have gotten in for the second entry here in this I call them order blocks just because that was the first thing that I learned. But I know you understand like what I mean, like that, right?
yeah.
But what if you missed that order block? And what if you ended up getting in here at this imbalance as well for your second entry? How would you would you use the fib, like where you would like reposition your stop loss? Like would you, let's say for example, like let's say you entered here, but would your stop loss be up here at option A or still all the way up here at option B?
So that's a little tricky because like if this had made a new low like this, if this push down made a new low, then my stop definitely would have been here, because then that's structural highs and lows and you wouldn't expect it to trade above this high, right? So, but with this case, I mean, this is such a strong area of imbalance that putting it above here would have probably been okay, because this mitigated this and you're almost guaranteed to get a reaction. So at the least, my logic is if I'm really certain that I'm going to get some type of reaction in the market to where I can get up a 1-to-1, then I'm going to choose the tightest stop I can choose. So like in this case, I think putting it right here, like if you missed this ICT term right here, and then you saw this being formed, you could have placed your entry right at the open and then put your stop here because this mitigated this. So you know that there's sponsorship within this candle. And with sponsorship being in this candle, you can be confident that when you get to it, you are going to get some type of push to the downside. Doesn't mean that it's going to be sustained, but it would give you the entry that you're looking for.
And then if it wasn't sustained, that would just be the point to where we're realizing like, okay, like were lower lows not continuously being created, or like were higher highs like continue, or like were higher highs made. Like let's say for example, like we got to this point and it ended up making like a higher high or something like that, like
Yeah.
blowing out that high and blowing out that high. At that point, like should we have already had our stop loss into profit, or would that just be a break even trade and just, you know, like reflect back?
I mean, personally, I don't do like when you get something like this, then yeah, it's just a change of structure, but you can't really predict changes of structure. They just kind of happen, which is what I talked about earlier. Like, or I think I talked about it earlier. Don't like anticipate a change in market structure just because you're seeing certain price movements and you think that like this is going to happen. But if it does, then you just reflect and you say, okay, structure shifted. Why did it maybe shift? And sometimes, honestly, there's not really a reason why it shifts. It just kind of does. Like up here, why did it shift here for a second? I have no idea. Maybe it's because they wanted to take this high, but like there's not a clear reason why it actually shifted because it didn't maintain. So like it's just looking at that, like reflect on it and try to figure out why it shifted and why maybe the trade came back. But other than that, there's not much you can usually do. And I don't move my stop loss into profit either. Most of the time, I just make sure I secure my partials and like I'll gradually do it, but don't aggressively trail your stop loss if you're trading on like the 1 minute time frame because I don't want to say they know that you're like how you're trading, but they will come back and take out recent highs and lows because they are new forms of liquidity. So if you move your stop loss quickly, you're susceptible to getting taken out of your trade prematurely.
Okay. And then so like you said, like I like how you keep reiterating like don't anticipate breakers of structure, just know how to react to them when they occur. I feel like that's really like, you know, getting like boot camped in my head. Because going up back to this area, if we could go back to that, like basically just kind of like reiterating what you were saying. Because okay, yeah, and then if we can make it just like a little taller and like wider. I appreciate you. Thank you. So with this though, like I feel like sometimes like I will see, you know, I'll see like this. So you did have that out here. So this is your break of structure
Yeah.
and be like, okay, well, we're making new higher highs. So I should be anticipating a new higher low. But then we ended up just having equal lows and then we ended up creating a lower low. So then it's like, damn, like the higher low that I was anticipating, like didn't even end up, you know, giving what it was supposed to give because it actually created a new lower low down here. So is this an example of like, you know, like good job in you being able to like adjust yourself to when the market adjusts itself, or like how would you interpret like me seeing this now, learning from like, you know, what you talked about yesterday, me now seeing this like, oh, okay, I see what he was talking about yesterday. Like would you say this is an example of kind of what we were going over?
Yeah. So like this is like, so there's that difference between like anticipating things based off of structure now and anticipating new structure. So like what I mean by that is if you're doing like this, you can anticipate a new low somewhere like down here to create a new high. Like you can anticipate that. But what you don't want to anticipate is shit like coming up and then let's say you have somewhere over here, there's like a big buy to sell, right? you don't want to anticipate this. Like there's a difference. Like make anticipations based off of current structure, but don't anticipate like shifts in structure, I guess is the best way to put it, because trying to anticipate breaks of structure is not like, it's just not easy to do because it's just not how the markets work. Like on the call that I had today, the one-on-one, I was telling him like as it happened, and he can drop in the chat if he wants to validate it. But I told him I was like, yeah, you get a ton of FOMO on the 1 minute. It's awful. It pisses me off so much sometimes. But like this, people here. So what I mean is there's a huge sell to buy. And I said people are anticipating that we're going to hit it and just break structure above, right? So people bought off of it, and you can look, if you put a line right at the open of it, there's a huge reaction, and it looked like it was about, so right here, it looked like it was about to go long, right? But what did it never do? It never broke structure, but you could have anticipated it heading lower based off of current structure, not just anticipating a new BOS. You could have anticipated that it would have just kept going because it was respecting this the whole day, like down, up, down, up. So with the structure you see, you can anticipate new movements, but don't try to anticipate like creating, a break of structure. That's really the danger, is trying to figure out or anticipate a BOS, not, whatever, like not just continuations, if that makes sense.
Hey, bro.
Yeah.
Do you mind? Can you go to EU real quick
Yeah.
and go on a 15-minute?
Yeah. Hold up.
I can annotate. Oh, yeah, I said.
Yeah, here. You said 15?
Yeah, so. Oh, yeah, right there. So right here, I'm looking at my charts. Can we view this right here and this right here as liquidity for when price reaches here to go?
Yeah. So
Like I'm asking, is that still valid to view as liquidity, even though we got this side right here?
yeah, that's completely valid.
All right.
Like if we had like ran, or if we had run this out by a little bit, it wouldn't be as likely, but this low is like right at or right above. I mean, we can look.
Yeah, I got a 19 on demand right here.
Yeah, so this, I would say that's liquidity. They're like perfectly equal lows, and the origin of this move up is still all the way down here. But like, I can tell you guys right now, like this price action is just like, how do you even trade this? I mean, seriously, you can see this stupid wedge that it formed all morning, and then New York opens and it does this. Like, I mean, you can't do anything about that. So yeah, that on GU, which I just finished, right? Yeah, I just finished GU. So that's what I was looking at on GU today. So for the day, I'm up like a little over 5%. Yesterday was a lot better. And I mean, most days I catch a couple good trades, but today I only caught one. It is what it is. But with this here, the question of like anticipating things, the structure that started forming could have told you or would have made you believe that you were going to get a new higher low, like right in here, because you pushed above and then you anticipate a retracement to go because that's what structure is telling you. But it didn't actually, this didn't come into anything. So this move didn't really have a ton of validity. But in either case, it was just a break even. Still, though, you need to, like, even if you don't lose money, that's not what it's about. It's about actually learning what you're messing up on, and you shouldn't need losses to like tell you that, if that makes sense. You should just be able to look at, why am I messing up? Like, trading isn't about money. I need to remind myself of that sometimes. It's about the process, because if you just focus on the money, like, you're really going to suck. It makes it really hard because it makes it feel like it's a job. You need to focus on the process. So even though I didn't lose money, I'm still like mad at myself, saying you shouldn't have done that, or you shouldn't have taken that trade because it was stupid, right? That's how you have to think of it. Yeah, I can look at GJ.
I just want to give like a tip to everybody. Like, as soon as I started looking at trading as like getting a percentage instead of looking at it as pips or money, like, it's easier on your psychology. But that's just me.
No, I agree on that 100%.
Yeah,
Hell yeah.
it's all about percentages. That's why, like, people are like, how many pips do you make? I'm like, 20. They're like, oh, that's it. And I'm like, if you understood risk to reward, you'd know that that isn't a problem, but people don't think of it like that.
Those people trade Head and Shoulders, so it's calm.
Yeah, yeah, exactly.
Quickly, how did you get your the price tags on your swing points? On on GE, you've got like your
Yeah,
perfect.
Dude.
Thank you.
yeah, no
And
problem.
bro, I've been trying to control the to clone the string points on the Zoom call earlier. You said just press control and drag it. I've been doing that, but it's not working. I don't know what I'm doing wrong.
So if you do, that shape is hard to do it with, but if you do like this and you have to hit control before, which you might be doing, but control and then touch it and then hold down control when you do it.
Yeah, I wasn't doing it. I got it now.
Yeah. And then if you hit, so if I hit control right now and then click my mouse down and hold it and do that, it highlights everything. You can just delete everything at once.
That's cool. Thank you.
And if you hover over something and then the little scrolling thing on your mouse, I guess the wheel, if you click the wheel down, it deletes the single object. That's something else that I recently learned. So yeah, trading view is fantastic.
So now that we're looking at GJ, can we still like kind of like work in like the idea of like you can anticipate a shift, but you can't anticipate like a break of structure, just like using this like with the fresh set of eyes?
Yeah, so like and Lex, if you want to give your input on this, you can. This is tricky, but I would agree that we're bullish.
100%.
It's just, this is in a kind of a weird spot. We ran out a lot of liquidity with this. I mean, higher time frame, you can see it's like this. This is all good. Like, this isn't confusing at all. Just, but now here, for me personally, like, I want to see body closures below. And it's also kind of obvious that this was just a run on liquidity. Like, this low made this high, and then this wick didn't break structure or anything. It just kind of took out this low, and then like going to the 4 hour, you can also kind of see what we did here is we created equal highs.
Yeah, I have it going up a little bit more on like the daily. If you scroll out on the higher time frame as a point of interest, I have it going up. But right now, I had it going down originally to that 4 hour candle. I believe it's like that one. And then also the one above that too, like right before it hits.
Right here.
No, the current one. So like go up, same lid, but on the over, right? Yep, down right there. The one down.
Yeah, down in here.
That one. Yeah, I had those 2 point of interest right now because they broke my first two.
Yeah, I do agree that, like, so I wish this would have made it a higher high, but this for me is pretty much the same, because this is just a lot. This is a lot of liquidity. Like, they know people are selling here. From retail, people are selling this definitely, because it's like a double top. So I do think it's going to come up. And like I said, this kind of gives me conviction, because this just ran out. There's so much liquidity here and here because they're daily swing points. So the fact that we ran them out and then created equal highs makes me think that we're going to go long. And then the structure here is like, boom, you could argue this, and then this, and this, and this, and then new low is here, high that made this low is here, right? So like, so this wouldn't be on the daily. It could kind of be classified as a higher low, because technically, well, it didn't break structure yet. So like, this isn't a higher low. What would be a higher low is if we have this leg, and then we have this, and then we get something within this range from here to here, because this is now kind of your bullish leg. And it's your bullish leg because we took the lows and then we created equal highs. So this is your bullish leg where you want to look for buys. So anywhere within here, if we get a higher low, meaning we get a low that produces a new high relative to this one, this would be your new higher low.
Would you be targeting that wick?
The wick right here, or
Yeah, the lowest one there, yeah.
honestly, yeah, like I could look at, let's go to the lower time frames.
I've been waiting for that imbalance to be filled for a while, but GJ's killing me.
Yeah, I don't know how you guys all feel, but the
It's not the
market's
most
been,
expensive trade.
yeah, the markets have been really confusing. Like, this is not super confusing, but it's still pretty confusing. It's nice that we have these highs though, because it's a really clear area to target. And then this is also a really clear accumulation area. Like, it doesn't look like, wow, that's an almost perfect inverse head and shoulders. You can see though, it's like, this is just demand. Like, this is all demand. So you can think of demand as a Wyckoff accumulation schematic. So we have this demand in here. This is weird because you're trending up, then you break structure here. This is all good, but then you broke above again, but now you just broke back down. So you could definitely see price short off a little bit from somewhere up in here. But even still, like, this is just, yeah, this is just weird, because the problem is you had this counter trend that this is obvious. And then you make the new low here. So this isn't the lower low. Like, I didn't do this as a swing point because it didn't produce a new high, and it also didn't break below this and have the pullback. So this is just the leg here, and then this is your pullback, and then you go down, and then you broke counter trend here. So you break the counter trend here. Now you're doing this and you're trending up, but then you broke this here, and also you broke this. So now it's like you broke counter trend to head up, but you didn't make a new high relative to this. So it's like you're just like stuck still within this big range. I think it's going to go down, but trying to like define the structure and really map it out is a bit challenging right now. But this is just for simplicity. You can definitely say this is a BOS here. And then Lex, let me know if this is what you're seeing, but this is a BOS here. And then this is all just one big supply area or distribution area. And we can expect a test up here to hopefully come down to here, because there's a lot of imbalance that needs to get filled.
Yeah, that was the at least what I was looking at the very least, and then to buy it back up at least on that demand if it came all the way down.
Yeah, like I like this demand, but what price is currently doing is really like hard to pick up on,
And
honestly.
I also noticed too, like when it makes equal highs or equal lows like that, it usually doesn't always come down to the demand level. It will stop like midway, like at that first POI I said. Most of the
Yeah,
times it would stop midway and then take out the highs or take out the lows.
yeah. No, this is definitely in a tricky spot, but what I can say is I expect it to go down and then push up. I don't think it's just gonna go without coming back down to this. That would be surprising.
So
Yeah,
on the
because
topic,
yeah,
on the
okay.
topic then of like anticipating versus reacting. So would you say, so with this breakage structure here, I'm gonna make it I'm just make it yellow. So with this break of structure here, that would be an example of the market showed you what it did. And so you should shift your, I guess, like bias and interpretation off of what it's showing you, as opposed to, okay, well, once I have that, well, I'm going to anticipate, this is a low and then the lower low, and then I'm going to anticipate some more lower lows to finally make its way down here before it turns around. What this in like what I drew in red, is that what you're saying like not to do? Because I'm just trying to make sure that like anything that I'm like doing that is going against like just the law of uncertainty, that I'm shifting my focus more towards like how can I adjust versus trying to like anticipate or predict that would go against just the natural law of uncertainty.
So like, yeah, what you're doing isn't like, that's not. So what I'm saying is if you have like don't anticipate breaks of structure, but anticipate continuations. That's what I should have said the whole time. People try to anticipate breaks of structure to reverse trend like this. They try to anticipate the high up here. That's not the right thing to do. What you can do is react to breaks of structure like this and start selling, but don't try to call this. Instead, when you're seeing an uptrend in a market and you see this high up here, instead of anticipating a BOS because you're trading into a supply level or a buy to sell, don't try to anticipate the BOS. Anticipate what is likely for price to do, and that's to continue with this uptrend.
Yeah, and that goes along with basically trading what you see and not what you think you want to happen. Like I had to learn that the hard way today with Nas, and Nas kicked my ass this morning. But that's basically how I had to look at it: is trade what you see only.
Yeah, exactly. Like trade what you're seeing. Like you can anticipate. Really, the only thing you should anticipate is continuations with the trend. Honestly, that's like the best way I can put it. Anticipate continuations, and of course, that's a bit like there are exceptions. And by the way, so I'm gonna go for 8 more minutes just so you guys know. But like here, there's demand. If you have a downtrend, anticipate lower highs and lower lows because that's what structure is doing. Don't think that because you're getting here, you're gonna just break structure. Like don't anticipate that you're gonna break this because you traded into this level. Wait for it to break and then react off of what you're seeing. But at the same time, if you're coming into a higher time frame POI, don't try to freaking sell it when you're like down here, because the chances of you selling it when you get into a higher time frame POI and it working, like in this case, it can work. But again, it's the idea of reacting and thinking about what would make sense. Like, does this downtrend make sense? Should you anticipate higher or lower highs and lower lows in a downtrend? Yes. But when you get down here, it's likely that you're going to get a BOS if it's a strong level. But don't think that just because you're in here, you're going to get that change in structure to take you higher. You have to wait for it. It's just waiting and confirming things and reacting off of them, not trying to do it all beforehand.
Bro, real quick, Does it really matter if you use FXCM or Odana or Wanda, whatever it's called?
I think it does, personally.
So which one you think is better?
I use FXCM and
Yeah,
forex.com.
FXCM is elite, 100%.
Yeah. Oanda is supposed to be the broker that the banks use. So I personally use
Yeah.
Oanda.
Oh, really? I didn't know that, actually.
So you guys all use, I mean, in the US, the brokers suck. I don't even use a regulated broker.
Really?
Yeah, I use,
Me either.
like, if I'm trying to trade Euro USD with 1 pip stops, like, I don't want to have a 1 pip spread. Like, that just kills me. Because it literally, when you get to that, when you get to that fine of entries, and I have to adjust my stop loss by a pip to account for spread, and I have a 1 pip stop, it cuts my risk to reward in half. So, and if I'm using a 2 pip stop and I have to add a pip, it increases my stop loss by 50%. So now it's 1.5 times greater. So then I'm only going to make 2/3 as much money. And so I use CoinEx or LQDFX. A lot of big traders in the US do. And it's just, for me, it's a lot better. I hate regulated.
Can you write that in the chat? Which one you just said?
Can you use those if you're from the UK? I'm from the UK, so do you reckon I'd be able to use them or not?
Yeah. Do you have IC Markets in the UK?
Yeah, that's who I'm with now.
IC Markets is really good too.
Oh, okay.
Like CoinEx, just being honest, like, it looks kind of sketchy because literally all you have to do is put in an email, and
Really?
yeah, they don't do know your client or anything.
Oh, okay.
And you just make the deposits through Bitcoin, but like, I've put substantial money in and it's never been a problem. And they have really good customer support, like 24/7. You can just hop in on the website and they'll help you right away. And the spreads are like, there's 0 pip spread on EU during New York. So
Yeah, whenever I see you guys post on Instagram, like when it's actually like on your MetaTrader account, you literally have like 0 like spread. I just see like one line, just like either like the ask price or the bid price. I'm just like, I don't know how you get it so like tight like that.
Yeah, and like, that's why for the people in the VIP, like when we send out trades, when we say if it missed for you guys, we actually mean that. Like, we're not lying, because sometimes it will miss for like everybody, but we still got in because we don't have like any spread on pretty much any pairs. Even like, I can pull up I'm gonna stop the recording, by the way, just because now we're just talking about like not super important stuff.